All right, let's wait a couple of minutes before we get started to let everyone come in. All right, I think we can begin. So good morning, everyone, and welcome to this month's Lexia's Growth Academy webinar. Today, we'll be discussing advisors and how and why to cooperate with them. We have Markus from Lexia and Turo Numminen from Sofokus Ventures to discuss the subject. So to get started, would you like to say a few words, Markus and Turo? Markus, it seems you're on mute still.
Try to yeah, good morning, now it's better. So I thought, thanks Juuso, and yes, welcome to this webinar also from my behalf, and it's today's topic is advisors and why and when and what kind of agreements we should have with advisors. So I'm Markus Myhrberg from Lexia Journeys. I'm here as a partner and acting in our IP tech and data group, as well as trying to keep up our startup and growth services with Juuso and the others. And today we will have different kind of views to this subject, like always in these Lexia Growth Academies. And happy to have Turo here to discuss also at a very practical level how to provide and how to act as an advisor. Turo, please.
Yeah, well, hello from my part also, and I'm from Sofokus and our vendors side. So we are a small investment company looking for very early stage startups and usually advising and helping the growth teams and growth companies. The advising is very integral part of our cooperation. So I will be sharing a little bit of our thoughts in the subject.
Excellent, thank you. I think we could get started with Markus giving a little presentation on the sort of more legal side, as well as then discussing advisors in general, and then going on to Turo and his presentation, followed by a Q&A/panel discussion.
Okay. So let's try to now, I assume that the screen is sharing. And whenever we have the, so here we go. So as you said, today's topic in general, so advisors and startups, and from some general point of views to the agreements, and like 15-20 minutes trying to keep there. You can send questions and ask questions also during the presentation, but maybe we take those in the end, or and anyway we'll have after mine and Turo's presentation, we will have time for discussion and questions, and it would be very welcome if you send or chat or whatever. So like, let's try to make it also interactive. But I'd like to warm up with some points. So I have made a presentation having some key aspects. This is not over everything you should know about it, but some points taking there. So why advisors? So it's a good question always, and should we and when using advisors. And today, when I'm talking about advisors, I'm talking something more than just purely service providers who can like provide services and send the invoice afterwards. So it's as an advisor, you normally mean a person or persons who are in the role and a little bit more active and contributing for the company, more than just a traditional service provider, for example. And why do you then need advisors? So that it's, of course, they can bring something to the company which you don't have, and which would be good and necessary, not the best way to always to hire new employees, etc. So bringing expertise both from kind of the domain UIN or the industry expertise, as we say. And what is very, of course, valuable there is the actual experience in certain sector. So of course it can be industry connected, but it can be also more general business expertise. So there are a lot of course, that kind of expertise which is not directly connected to certain industry, but in overall business types or certain like aspects of the business. This, of course, includes everything from finance to marketing and from like legal matters to accounting, etc. So the whole variety of business expertise, and it's really valuable sometimes to have a little bit like out of the house type of ideas. So not every single and good idea is invented in house, and sometimes it's very good if you have a person who has a little bit distance from the day-to-day operations and bringing his or her or their opinions from the outside. That helps. Sometimes it's really good if you have a good team. It's really great to like bring new ideas and inventing everything new all in house, but sometimes there might be something out of your team, valuable ideas and assets to bring in, for example, with this kind of cooperation, a certain advisor. And of course, it's very valuable, as we have noticed in many startups and where we've been involved, so that is kind of extra resource for executives, extra resource, especially for the CEO, to have. I'm not meaning like they acting as a day-to-day worker, they're doing specific tasks, but like bringing additional resource when needed, and bringing kind of extra freelancer, at least thinking power in the company. That's like in generic. Turo will also bring some ideas how in practice. So what is like the business expertise in specific area, for example, Sofokus can bring. Then, of course, what is very valuable from the advisors is the relationships. So including business contacts, other advisors, consultants, partners, employees, etc. Of course, you can find those also without advisors, but when sometimes it's really good if somebody can directly refer and say, hey, you should use these kind of partners in your business. And then, of course, investors and other funders. And this is, of course, one of those questions in which role the advisor is. I don't have that directly in what role every advisor should be, but more like some generic points where and when advisors could be needed. Before going through this, I would say like advisors could really be a different role. Somebody can be just purely in one specific role, to be, for example, very specialist in certain type of business models, or somebody else can be more generic, or somebody just for bringing the funds, or the third one to bring something purely different. So I don't know. I don't think that there's always available advisors who could fit all these roles. I don't know. We can talk a little bit later in the end, at least in the end. So, what kind of pool of advisors you should have, and how should they act together? I don't have about that too much. But the stages where you could need advisors is, of course, so the like funding, strategy, product market fit, and whenever you create new product lines, moving into new market segment, industry, and moving into like new areas in international, going into international business, for being only from in a certain country and then going abroad. Of course, that's very typical situation also when you need advisors advising on that, and opening the doors also in other countries and territories. Then one like kind of very special type of advising is also restructuring companies. Sometimes, of course, when you're pivoting with your products and services, but also when restructuring needed. That's more like when your startup is already in a little bit longer in its life cycle. But that's like warming up and just like having the ideas when and why we probably could have advisors. Then going more in the details, like then what should we agree, and more from the legal point of view. And if you take advisors, you find a good one, and he or she wants to contribute for the company, and you're willing to take, what is needed to have and to like to agree in more concrete about your cooperation. We normally talk about advisor agreement as a tool to agree on the commitment and also on the compensation for the advisor. It includes, of course, description of the services and contribution to be agreed and to be provided by the advisor. It can include clauses regarding the investment. We can discuss that later. So is the advisor just an advisor, or should they at the same time invest in the company? Of course, which is a kind of very good commitment from the advisor's side. Then the compensation model, I will come back a little bit more on that in next slide. Then assignment of IPR. I don't have further clauses regarding this today, but this is more like to remind you and to remember that the advisors are not employees. And even with employees, you should always include in your employment agreements IP clauses. So, and especially with advisors, at least if they are not part of the shareholders agreement, you should have a specific IP clause to secure and to assign the IPs to what are provided and created for the company to belong to the company. This is one of those problems sometimes in due diligence processes, when you have a certain pool of advisors or partners around you, but you have not made good agreements, and then you don't have what we call chain of titles. So actually, if the advisor is very active and bringing also some not only pure light ideas, but some assets in reality and some inventions or whatever it is. So this is one of those clauses should be agreed, as well as confidentiality, of course. There might be some restrictions and obligations already under the law of trade secrets. So the trade secrets might be protected already by the legislation, at least in Finland. But of course, a special confidentiality clause or a separate NDA should take place here. Then one good question is the non-competition. So is the advisor allowed to have similar companies to be advised, or what are the roles? And this is, of course, sometimes if they are more in the role of investor, you can't have too wide non-compete clauses or at all. But of course, it's a good question always to ask, and good clause to negotiate. How is your relationship, and is it okay that they advise just similar companies? Sometimes it's good that they do, because then they have the valuable knowledge. But sometimes, of course, it's good to have something that at least the advisor will not in the future, for example, establish a similar company, etc. No just one right answer. What kind of non-compete should you have? But of course, it's good to discuss also about this question. And then, of course, one key point, if you have a good advisor with a already valuable name, is the right to use the name of the advisor. So, and this is, of course, sometimes it comes that, hey, is it okay that I put your name on our websites, etc. But this is one of those rights actually to be agreed separately, if to be sure that you both, the company and the advisor, think in the same way about this question too. Then, of course, there's like other agreements. If your compensation is based on equity, you will need shareholder agreement. And then it's a good on the procedure how to adhere there. And then, of course, the question, should you have a separate minority shareholder agreement for the advisors and other partners, etc. Let's not get in there today. We already had a good webinar on shareholders agreement. I think it's still online, and you can check it from Lexia Growth website or from our YouTube channel. And then, of course, depending on what is the compensation model, should we have their special option program and agreements for the advisors. And then I just took some advisor agreement clauses and like tasks to be agreed here, and starting from, of course, the services. And these are, we have different kind of approaches here. Some of the advisor agreements are very generic. So they just say that the advisors should contribute actively to the benefit of the company or something like that. It can be very generic and open relationship. And then it's upon like, are both parties happy or not? Or then you can have more specific clauses like attending at least quarterly or whatever. So what is the right or monthly to the meetings and feedback sessions, etc., etc. What is good? There is no right answer, and of course this is like also very all the services and contribution obligations are of course very tight into the compensation model. The more advisor agrees specifically to contribute, of course, then the compensation should reflect also the commitment. But what is always good to all agree is some kind of reasonable responding mechanism and how actively you should also act there. So acting different sessions or meetings is one question, but like maybe more sometimes more valuable is actually that the advisor would be available for your short calls or emails or Zooms or whatever. This is like the basic contribution, and then and then we have these. They are called sometimes additional services, but of course they might be just like the also the main services, depending on the role of the advisor. One key role is of course promoting the company, and there you can have specific clauses how to say and what kind of course normally actively promote making introductions, forwarding to friends and other advisors, investors, etc. the materials in overall and like that. Sometimes you agree on certain numbers of introductions, etc. I don't have that strong opinion in there, but it's very hard to say that you should make at least 3 introductions per every week or month, etc. I think as they say that sometimes the quality is more important than the quantity, and of course at the end of the day the outcome and the results are the most valuable here, not the number of actions as such. Then the role in fundraising. Sometimes the advisor, of course, if you hire or if you have the commitment just for the fundraising and the advisor is purely on that role, then of course it's one of the key elements. And then it's a good question that is the advisor there in the middle as a broker, and where the compensation coming from for the advisor is connected to. Is it connected purely to the closing of investment or other funding, or is it connected also to some other services to be provided by the advisor? There is no right answer to this, but of course you should be aware of the actual role here. So that was more like about the services and role and contribution of the advisor. Then what should be agreed, of course, is the compensation. Then this idea where I'm talking today are more like the equity compensation is based on the equity compensation model and questions regarding that. And this is sometimes a bit hard to formulate, but of course you could take a similar kind of approach you might use in your option programs or in shareholders agreement. So vesting type of approach. today I'm not taking any further opinion or not talking too much about the taxation and how should the shares be valued, etc., etc. That's a whole totally different question, but of course should be taking into account, at least in Finland, is always a taxation, because the company law lets you do or gives possibilities to structure in quite different ways the actual sweat equity type of compensation, but the taxation might sometimes not be too beneficial for the parties. Where it should be connected to the like performance levels, of course, you can have different performance levels, how they are reached, and where they are tied to. And then the vesting, how fastly you will get your equity compensation, and should have, of course, some kind of cliffs there. And normally it can be, I put here 3 to 4 years, of course, regarding advisors. That might be quite a long period. So it can be much shorter also if you agree only on a certain project or a 1-year program or whatever. So it depends on the case. But I would suggest to both parties that there should be some kind of vesting model, which is easier also if the agreement sometimes would be terminated or already during the way. And then, of course, expenses are always good to be agreed. Are they compensated? Do you give shares or options? And that's sometimes more question about tax, as already said. And then there is the monetary compensation, if any, I put it, but of course this is connected to the equity compensation model. In quite many advisor agreements, you might see the both mechanisms. You have a certain monetary compensation, and then some parties tied into the equity. And of course, sometimes you of course, if it's a fixed term advisor agreement, it will end at the end of the fixed term. But also, in all advisor agreements, you should have some kind of termination clause there. And from the company's point of view, it would be essential to have right to terminate the agreement at any time. Should it be for the cause or without cause? So that's a good question, but it's a very typical for the advisor agreements actually that you have quite open right to terminate the agreement, and it's based on the trust. And if the company doesn't feel anymore to have the value to get the value from the advisor, so it can the agreement can be terminated. It's not beneficial for either of the parties to keep on the agreement, which is not anymore bringing value and based on trust, etc. And then the few last points, of course, are the risks. If we take advisors, so what are the risks? So it's the other side, what taught already. So we have an advisor not contributing anything and gets equity anyway. Advisor has a bad reputation. It comes up that it wasn't as good deal as thought, and that of course can cause some harm. Not that typical, but of course sometimes advisors can have also that side and not bringing the publicity weighted, etc. Then of course it can come up that at the end of the day you don't have a common understanding of the business and future, and there is no that kind of cooperation you hope for. And of course from the legal point of view, the agreement is too good, whatever it is, and that's why you should always also concentrate making and drafting the agreement to reflecting the rights and obligations you thought the both parties should have. And at the end, every advisor and company is different. These were just generic point of view to take into account. Advisors can really bring a good value and they can benefit the company, but both advisors, of course, but also founders, and I put here the agreements, they need to be flexible but standard enough. So also regarding both, so you can agree with the advisors whatever, but try to keep it quite simple and standard anyway, so it reflects more the standards in the advisor market, as because there is some very typical ways to act also, and it's always easier if you follow that kind of models already existing. But this was more or less what I had today, and warming up a few points of the agreements, and now I give not the floor, but probably the screen to Turo. If I just get the right screen, just a minute.
Turo, you might be still on mute as well.
Oh, yeah, thank you. Well, thank you, Markus, for clearing up the important issues on advising on the legal side. And in my presentation, I will focus a bit more on what we do in an action, and how we see how we see the advising with the Sofokus and Sofokus Ventures. So I have a small presentation, and I'm just sharing my screen. Here you go. I hope you are able to see my screen right now. Okay. So basically, just a brief introduction. We are Sofokus Group, and we are basically having 3 different kind of services in our group. One of is Sofokus Ventures. So we are looking for early stage startups with time and money type of commitments. And in Sofokus service business, which is the middle ground, we offer digital services and digital help for companies on their digitalization process. And then we are launching our own unicorn product later this year. So this is where we are at the group level. So basically, very briefly on digital services, we got like 40 people and we got 20 years of experience, and we help companies to create digital advantage using our help and using the technology. And in this service also, we are creating a lot of guides, we are creating a lot of help for companies, because we want to share the understanding of opportunities, and we also offer a lot of free mentoring and free sparring to the companies and startups and students and so on. So we are active in the field, and we have been creating quite a few companies from scratch, and helping established companies to grow. So we already know what the startup ecosystem and startup-minded teams, what they think, and we have been helping them for quite a long time. But if we go to the to the investment programs, we have co-founded about 20 companies during the past 20 years, and most of those companies are still alive. Some of them are sold, and some of them went bankrupt as the usual story. And we have kind of 3 different models on how we help the companies. And one is the push, where we put the sweat equity and maybe some capital and co-found the startups with us. Then we have the digital hard capital, which is an investment program for early stage digital hard startups, meaning companies who are embracing the digital platform as their business core. And then we have co-creation of startups with service, with the corporations, which is a slightly different game. And what comes to the advising, we really believe helping in others. And what we do is the first step of entering to the advising agreement or entering the investment phase is discussing with the teams and sparring them and giving them some initial value so that we can really know each other and see if we can work together, if this is a good fit with the companies. Legal things aside, they're definitely important, but if the discussion and if the connection between the advisor and the team is not good, then the advising relationship, we believe it would be very, very challenging. And basically, one of our pre-investment discussion is always on how we can help the companies, what type of advising, what type of guidance they are really needing. And then we kind of try to get the mutual understanding on time and of course money required for the company to succeed. And before we enter to the advising agreement, in a way, we agree the roles and we do this kind of due diligence that Markus was very well explaining, that there are a variety of different options, there are a variety of different ways to actually do the advising and actually structure the agreement. I don't go into that. So basically, we agree what we should do. And in our model, it's all 100% sweat equity based. So far we haven't sent a bill for advising a company. It's always that we get a compensation in the form of equity from the company. Well, stock options could also be used, but we haven't hit to this just yet, because we kind of believe that taking the risk together and only making agreements with the team, we truly believe it drives to the mutual benefit. Of course, there are cases when the advisory is needed on specific things and it's a short term, then I definitely believe that equity-based model may not be the best one, but we are planning to be a long-term partner with the company. So we believe that we should be as a part of the company, part of the team. And for our goal of advising, it's kind of, we help to provide an external view as a partner. We are in the company, but we are also outside of the company. So usually the team might be too keen, too in love with their own idea. So one of our tasks is to is to tell them that everyone may not share the same love for your idea that you personally have. And we also definitely want to listen to challenges. We don't want to hear the hockey stick pitch that next year our turnover will be 25 times what it is today. And we want to hear the difficult issues because we believe that this is where we can help the best. Usually, if everything is going fine, no problems, no roadblocks, just open road ahead, they don't need an advice. Why do you need an advice to drive on a motorway? It's usually the advising is asked when the going gets tough. There are challenges, there are difficulties. That's when the companies and teams usually need more help. And that's why we want teams to be transparent with us, because we know that challenges exist, and usually by helping the teams, giving them the right advice at the right time can at least make the challenges not go away, but be able to weather the challenges a bit better. And one of the most important parts of advising or helping the company are the connections. It's not that me or my co-founder Teemu, that we are the only persons in the world who can help the startup. But one thing we can really provide is connections to the startup ecosystem, different communities, and also different companies, different persons, where to look for help, where to contact, who are the trusted partners, where you can find good value and get a good service. Because usually startup teams, they don't have those networks. Some of them do, but we find that quite a few of them have a lacking network. So connections is an very important part when we advise companies in real life. And of course, we have our own pool of talent, and also we have external partners that we can point the companies to and offer them help by just leading them in the right direction. One of the things we usually do when having an advising relationship going on with our startups is we really push on having a roadmap ahead, because depending on the team, some of the teams, they are very focused on short-term issues, on solving the challenges of today, next week, maybe next month, and not looking ahead, not keeping the clear mind on the goal, and not planning the roadmap in a bit longer term. I understand that, because your money may run out in 3 months, and you are trying to do everything you can to avoid it. But in that case, it's also our task as an advisors to remind the companies of the goal and bring on some new opportunities, and also help them to make longer term decisions. So this is what we find quite often, that we need to discuss with the teams and founders. And one quite important thing in advising is also it's the motivation and team pulse. So how is the team feeling? How are the personal relationship going on the team? How is the motivation? Because at least, well, we are talking on early stage startups with no established revenue streams, not a long year history. So the going is usually a bit more pumpy. And also people motivation is very integral part of the future success of the company. So we also try to make sure that team is motivated. They find the purpose on why they are doing it. And I don't say we need to remind it, but it's just like they tell it to someone else. That even sometimes help. Like in one company, we have an advisor meeting every second week, and it's at least some part of the meeting is always making sure everything is still on board, everyone is motivated, and they have the strive to go forward. And advising can be just kind words, kind motivation, reminding them of what they have done, what they have achieved during the last 2 weeks or last 2 months or whatever the time frame is. So advising is not only a cold business decision, it's also very human communication with the team, with the companies. Because usually when you are advising startups, the founders at least, they are really emotional about their company, about their achievement, because that's their baby, they love it, and they feel a lot stronger, and if everything goes up or goes down, they feel it, and their motivational levels can also, how to say, vary very much within the weeks. As in more established companies, something going bad is usually a lot less going bad than in startups, because every emotion and every activity is kind of multiplied. They get a new client, that can mean that they have a 50% new sales next month as a company. In established companies, this is not usually the case. And same thing, they lose a client, they can lose just half the sales, or they get new stuff going on. So the changes are huge. So that's why they also need somebody to provide them a bit longer term view. And this is what we try to do as an advisor, and we really want to success with the company founders, and we acknowledge that we create this success together. We can help them, we can give them motivation, we can give them roadmaps, but the most important thing is that we have a common understanding of the goals, and we have a common understanding on why we are doing this. And this is, I believe, is one important part of advising a company. Besides, of course, the business issues on what technology to use, how to do your IPRs. These are the stuff that needs to be done, but without the motivation, nothing gets done. So we build it up from the team view, and then go on the more details of business. So in case you are interested, you are feel free to contact us in Sofokus, and of course ask our help in your startups or in your grown-up companies. This is my part. Thank you.
Thank you, Turo. So I think at this stage, if you have any questions, you can put them in the chat box or the question and answer box, and I can read them out. But as an initial question, what do you think is the most important thing to require from an advisor, especially in the beginning stages of a company or a startup? Maybe if Markus or Turo, either one of you would like to answer.
Turo, you can start.
Yeah, well, thanks. Well, I would say honestly, and also reasoning, at least when you advise in a very early stage startup, everything doesn't always go according to a plan. So basically, if you have a shared vision, shared ideas, then I believe that you have a better chances of surviving. And also if the things change, then it's easier to agree on maybe how to change the advising agreement, or how to how to go forward. So basically, it's honestly and sensible, common sense.
That's very true, and that's where I think that's more important in early stage when it's a little bit more mature startup already. Then you might seek for specific type of knowledge or advice, or the relationship to be a little bit more structural, not only like and maybe sometimes even good to have a little bit different visions and see even so. But all the times is like, because now as I said in the beginning, we're not talking about like service provider relationship, but by advising and going the path with the startup, and sometimes, as Turo said, be quite a long time along there. So of course, always the why questions, and what could you bring and why, and do you really know where you are and what you are committing for kind of. And the advisors should also be very careful there, that as Turo very well said, so you shouldn't take that kind of company act as an advisor where you don't really have the feeling that you bring some additional value. Is it a business or motivation or feelings or whatever? It's not that, doesn't have to be always the very heavy expertise, but more like soft kind of things. But everybody should be quite know what they're doing actually there.
Yeah. Well, if I may continue a sec, you are very well said that in different stages of the company, they really need different advisors. They need different resources, and in a very early stage when they have all the balls flying like this and they don't even know where they're going, it's very hard to acquire specific business knowledge of everything. And when you kind of have your way, but we go that way, then you can start building up the advisors on that road.
Yeah, maybe it's a good if the advisor still have some ideas where to go. If the advisor is too flowery too, so it's like, okay, but it's got to a point which is very that's very typical in the beginning. So, Juuso, did we have some?
Yes, we have a question. So, Anastasia asked how to develop a mutually beneficial advisor agreement with a legal advisor without having any legal knowledge inside the company. Then what can be a minimal percentage of equity offered as compensation to the advisor? And finally, does it make any impact, e.g. on general startup image in the market, how many advisors a startup has? So if we start off with the first question, so how to develop a mutually beneficial advisor agreement with a legal advisor without having any legal knowledge?
And that's a good question. I don't know. There are, of course, probably you should use a legal advisor before engaging in any legal advisors. So, and if you don't have any knowledge about the agreements, there are of course available some templates online, etc. Well, maybe ask somebody, a peer or another legal service provider, what to agree is there. If we talk about legal advisors in law firms, etc., they do and we do have very very generic terms, so it's actually, but that's more like the service provider model, but it's like, and I don't know. Anyway, my advice is always that have that kind of agreement where you understand everything. Don't agree anything you don't understand, and the more specific it is, sometimes it's good for the company. Then was the question about the equity. Maybe I think that was more like that. But Turo, do you have ideas? I.e., I intentionally didn't take any percentages because it's a really hard question and it asks quite many times. They have, especially in the US, they have some standards created based on the stage and role, etc. But it's very hard also to say that, hey, at this stage of the company is at this stage, and I provide these services, then I get 0.5% of the company after 3 years or something like that. Depends on the case, unfortunately.
I definitely agree on this. So depends on your role, how heavy is your involvement, and of course, in what phase the startup is or what phase the company is actually in.
But if I say that you can start as low as from 0.5 or something like that in very early stage company, just giving general advice and etc., coming to few percentages, etc. But I would say that not seeing advisors normally without any investment having bigger than 5% or something like that. So it's like that's the scale. Of course, it's totally different if you investment and have if you have the investor role partly and advisor role partly, then it's a combination. And this is actually a quite good. I try to keep the actual investment and then the possible sweat equity type of compensation little bit. No, of course they are tied together, but they should be kind of separate to be clear.
Yeah, well, I kind of agree that you don't want to give too many percentage points to the advisors, because if you are looking for investors later on, this will also undermine the value of your company if you have like few advisors already who own like large stake of the company.
Yeah, and of course sometimes the advisors might be willing to have a kind of midterm exit also there if they just want to. There are certain type of advisors who want to sell on the way. Sometimes it's not possible. And of course, it's a good question that should there be some kind of redemption possibility to buy out the advisors if the investors really see that, hey, we have too many, at least very early stage advisors not being active anymore, etc., etc.
This is very good point, that if you take too many investors or advisors at the beginning and then you have your cap table is really messy, you have like 10 different names on it and one of them is only providing some help, there could be very well a clause that caps the maximum value of the startup for those advisors if they don't do anything or something. And
the last one is a good. So how many does it make impact? How many advisors?
Well, yeah, kind of. it's yes and no. If it depends on, in my point of view, there are like two kind of public advisors. One of them are names that you know that don't put any time on it, and one of them are not that well-known names that can actually help you with their time. If you get very high-profile names, then be prepared that most likely they don't have any time for the company. You get Elon Musk to your advisors, you know, most likely you can't even call him. He don't answer to your call. He's a name advisor.
That's very true, and yeah, that's very well said. As actually, it's the role, and then if you have those just names, you need anyway the advisor is doing actually something. So, but if you have like, I would say that 2-3 advisors is quite good. It's already advisory, kind of advisory board. But if you have 10 advisors, I don't know. Yeah, it might feel already too much.
Yeah, for me, it's kind of signal. You take everyone who have you talked with and get the name, because most likely you don't need 10 advisors.
Because you should trust you should trust on yourself and the company, and not only that, if you kind of have the advisors like securing your success as just as a names, and to say that, hey, this is our team. So it's at some level it's good, but you shouldn't trust too much on that. And anyway, for example, the investors, they quite well know the role, they know the advisors, they know the roles, and etc. And even if you say that these advisors are very crucial part of our team, normally advisors are not there on daily basis and not doing the actual task and jobs you have to do it. So, but they can bring some very valuable additional assets, knowledge, etc.
Excellent,
Yeah,
thank you. I think we're coming up on full time. So thank you, Turo and Markus. Would you like to have a few closing words, and then we'll finish the webinar?
I think I already had mine. Thank you so much for attending, and let's keep in touch and follow also Lexia Growth next webinars.
Yeah, thank you from my part also, and as I said, advisors are a good thing, so keep us on mind, but really focus on what are you wanting from advisors. So it's a two-sided game. But from my part also, thank you for Lexia for organizing this, and let's get back on the next one.
Perfect. Thank you for the event, and the next one we'll be posting information on the growth.lexia.fi website, as well as sending out information on our LinkedIn and email to those who have subscribed. So thank you for the webinar, and see you at the next one.
Okay, see you. Bye-bye.
Bye. Thank you.